Are you controlling your finances or are your finances controlling you? And so in today's video, I'm going to go over some management strategies that can actually increase your business's profits and cash flow. Okay. And so grab your notebook and something to write with because class is now in session. And so, real quick, if you are new to me or to the channel, my name is Katrice, and I am a licensed health and life insurance broker and paralegal. And I help women entrepreneurs to grow, protect, and secure their finances using a comprehensive, personalized strategy based on their financial goals and risk tolerance. Okay. And so if you find value in this video, please do give it a thumbs up, and that lets YouTube know to keep sharing it out with more people. Okay. All right. So on this channel, if you are a regular to the channel, or even if you're new, on this channel, I educate on health and life insurance. Okay. Um, and I also talk about estate planning and securing your legacy. Okay. But you can't purchase life insurance without money. And in working with clients, what I have found is that many haven't set up their business finances properly, which is impacting their personal finances and how well they can protect and secure them and protect and secure them. Okay. So I was like, well, maybe I should make a video to highlight how important financial planning is, not just in your personal finances, but also in your business finances. Okay. And so, if you're new to entrepreneurship, or if you have been an entrepreneur for a while, but your finances just ain't financing, then this video will be very helpful for you to get your finances set up properly. Okay? All right. So, money management and financial planning are crucial for your business's success as they enable efficient resource allocation. They help you to make informed decisions and the ability to participate and manage financial risk, ultimately fostering stability and growth. Okay. So if you look back, let's look at some couple of businesses who didn't manage their finances properly and they pretty much are no longer around. Okay. The first one is Blockbuster. Blockbuster, if you are around my age, I'm 42, so I'm a older millennial. If you are around my age or older, then you definitely remember Blockbuster, okay? And so Blockbuster was a huge dominant force in the video rental space, okay? But Blockbuster failed to adapt to the rise of streaming services like Netflix. um, Netflix was like probably the one that really took them out. And it was because of their inability to invest in technology and adapt their business model, which is what led to their bankruptcy and demise. Okay. Now, another one to take a look at is pets.com. So pets.com was an online pet supply store. And this one is a really good example of the dot-com bubble failure. They struggled with high operational costs, low profit margins, and the inability to convert website traffic into sales, despite a large marketing campaign. Okay. And so that is what led ultimately to its demise. Okay. And so there's quite a few mistakes that Blockbuster and Pets.com made. And I'm gonna go over a little later in the video, I'm gonna go over some common mistakes that a lot of entrepreneurs make that they overlook, but are very, very easy to correct. Okay. And once you correct these mistakes, you will see um, not only will you see a difference in your business's finances, but you will also feel more secure. Okay. All right. So when first starting out, the first thing you want to do is you want to set some clear financial goals. Okay. And you can use the SMART system for setting up goals. Okay. And so SMART is an acronym that provides a clear structure for setting up your goals. Okay. So the S is for specific. And so you're going to define your goals clearly. Okay. So you want to avoid vague statements and focus on precise outcomes, such as saving for a specific purpose or paying off a particular debt, or you want to focus on, okay, a specific amount of leads that you want to bring in, a specific amount of cash that you want to bring in, okay? And then the M is for measurable, which is you want to quantify your goal to track progress effectively, ensuring you can see how close you are to achieving it. Okay. The A is for achievable. And so you want to ensure that your goals are realistic given your current resources and restraints. Okay. So an example of this would be like saying, I want to make $5,000 this month versus I want to make $50,000 this month. Because if you're in your business and you've only ever made, say, $2,000 a month, saying you want to make $5,000, $50,000 a month, um, it's not that it's not attainable. It's just that you have to be realistic given the trajectory of where you've been. Okay. But if you say if you've only made 2,000 and you say, I want to make 5,000, that feels more attainable because the $50,000 doesn't feel attainable to you because you've never gotten over 2,000. But $5,000 feels more attainable than 50, okay? Because overly ambitious goals will lead to frustration and demotivation. I have been there. It doesn't work. I mean, it's great to have those goals, but I'm a very practical person and I am a big believer in the um being realistic while also being ambitious. Okay. So if you say 5,000, that is an ambitious goal because realistically all you've ever made was two. Okay. And then the R is for relevant. And so you want to align your goal with your broader financial objectives and life priorities or business priorities. And you can use this for personal or business, but in this concept, I'm talking about your business profits. Okay. You want to align your goals with your broader financial objectives and business priorities, ensuring that it contributes to your overall business financial well-being. Okay. And then time bound is the T. And you want to set a deadline to create a sense of urgency and motivation, providing a clear timeline for success. Okay. So SMART goals help you to navigate your challenges by providing clarity, focus, and direction. But they also encourage disciplined planning and adaptability, which are essential if you are truly focused on getting ahead. Okay. All right. And so now let's talk about some examples of financial goals would be like your revenue targets, how much you want to make for the month, um, what you want your expenses to stay at for the business for the month, and then some investment targets if you're looking to, invest more into your business. Okay. And that looks different for everybody depending upon what your business, what type of business you have. Product-based businesses um, will have more, okay, I'm going to talk that. Product-based businesses generally have more expenses than service-based businesses. And so how you set up your financial goals is just dependent upon the type of business that you have. Okay. Now you also want to calculate your expenses versus your revenue realistically. Okay. And so you want to identify and categorize your fixed expenses versus your variable expenses. So your fixed expenses are generally the things that are going to cost you the same thing, each month. So if you have a CRM system, if you pay that monthly, then you're going to pay that certain amount a month. If you have like a scheduling system, you're going to pay the same thing every month versus variable expenses. Some things might change, especially like if you're a product-based business, those expenses may change. The product, the supplier may go up, so that might change every month, okay? Um, and then you want to forecast realistic revenue based on your historical data and market research. So, revenue forecasting plays a crucial role in financial planning for your business because it helps to predict revenue for a certain period. And some people do it quarterly, some people do it annually. Okay. Me personally, I do mine quarterly. Okay. And so, by analyzing historical and current performance, along with external factors such as market conditions and economic trends. Okay. An essential component of the business strategy, revenue forecasting assists in making well-defined decisions, resource allocation, and budget planning. Okay. Now, another thing is you want to allocate your funds strategically. Okay. So especially when you are first starting out, you only want to prioritize expenses that directly generate profit. Okay. So you're only going to purchasing systems that are absolutely necessary and not trendy. Okay. Because one thing that I got caught up in when I first started, when I first became an independent agent was I thought I needed to do all of this branding and get a website and all of this stuff in order to run my business. And when you first start out, you may not be generating as much, cash flow as needed for all of these expenses. And so what I had to learn was that all I really needed was a scheduler. I needed a scheduler and I needed a CRM, which I didn't even have a CRM at first. I just had a scheduler and I had a spreadsheet that I used. That was my CRM, was a spreadsheet. Um, I had to learn that I had to, because I had a lot of systems and things that I was paying for. I wasn't exactly really utilizing all of it, and it was just costing me more every month than I wanted to be spending, especially at the beginning when cash flow wasn't as, flowing. Okay. And so you only want to get the things that are absolutely necessary to run your day-to-day operations. And then as you grow, then you can get more systems and things that you need. Okay. Um, and so when you first starting out, you you may not have the reserve funds that you want. But once you start seeing profit growth, then you can start setting aside reserve funds. And I'm gonna go into this a little that part. I'm gonna go into a little more a little later in the video, okay? And then you also want to do some regular tracking and review. So you want to do monthly financial check-ins. You can also do weekly financial check-ins. Um, it really just depends on how you have your business set up, type of business that you have. If you are a product-based business, then I would say you probably want to do weekly check-ins, just to kind of gauge where you are. Um, versus like service-based businesses would probably be more uh, checking in, do like monthly check-ins, but you always want to do a check-in, whether it's monthly, bi-weekly, or weekly. You always want to do check-ins with financial check-ins to make sure that things are staying on pace or to catch any hiccups that may be going on. Okay. And then you want to adjust your finances, your business finances based on on a performance analysis, okay, on how they are going when you're doing your check-ins, okay? All right. So now let's in this here, I want to jump into some common budgeting mistakes and solutions that I see arise, okay, when it comes with businesses, okay? So this is a really big one. And I think this happens to a lot of businesses within the first 1 to 5 years. Okay. Well, I won't say 1 to 5, I say 1 to 3, because by the time you hit your third year in business, you have kind of gotten a groove and you kind of figured some of these things out. But especially that first year, I see this, and that's not separating the personal and business finances. Okay, this one is huge, and it can really uh, tank your business. Okay, so first of all, when you don't do this, there's risk and tax implications. Okay, failing to separate your personal and business finances carries significant risk, including potential legal issues, difficulty in tracking your income and expenses, and increased tax liabilities. Okay. You also want to set up separate business accounts, a separate account for your business. Okay. So you have your personal business account. Then you want to set up a business account for the business so that any revenue that you are receiving from the business, it goes into that account. That is the account where you will pay all of your business expenses. That is probably that will be the account that you will pay yourself from. But you have to keep all of the business revenues separate from your personal revenue. Okay. Um, but you want to create have those two accounts. Then you also want to create a budget for the business. You also need to understand your cash flow and communicate your boundaries clearly. Okay. Um, and so the next thing, when it comes to communicating your boundaries, this is with your clients and your business partners, okay? You want to establish clear expectations regarding payments, deadlines, and communication methods, okay? One thing that I had to learn was that um, I used to have, when I first started out, I used to have clients texting me at like 8, 9, 10 o'clock at night about their insurance. And I had to set business boundaries. Like, I'm okay with you texting me, but just know that my business hours are from this time to this time. You may not get a response until it's business time because I don't work around the clock. Okay. And so you're going to have to firmly communicate your boundaries, and not just communicate them, but actually stick to them until it is established that, okay, oh, she's not working now. The business is closed. Okay. And so, you know, when the business is open, then I'll get a response and they will start to accept that. Okay. Another thing, mistake that I see is underestimating expenses. And a common overlooked expense that I see is liability insurance. Okay. Um, no matter what business you are in, I recommend that all business owners have liability insurance, because if somebody decides that they want to sue you, you have that liability insurance to cover you, because then the liability is now off of you and your personal finances or the business finances, and it's on the insurance company. Okay, that is something key. Like me as an insurance agent, I can't even do any contracting. I can't contract with any insurance carrier without carrying um, errors and omissions insurance. Like they won't even contract you, period. You have to, I have to have it. So all businesses should have it because then it relieves that burden off of you and it's onto the insurance company. Okay. Also, some other things that I see is strategy for accurately predicting the cost, your business costs. Okay. Now, this next one here, which it is a mistake, but I don't think it's a mistake because people are just like not wanting to do it. I think it's a mistake because it's not understood. Okay. And this is something that I had to learn as well. And so it's something that I just think a lot of business owners don't understand this, and that is cash flow management. Okay. Um, and so first off, what is cash flow versus profitability? Okay. So cash flow shows how much money moves in and out of your business, while profit illustrates how much money is left over after you have paid all of your expenses. Okay. So an important distinction for cash flow is that it refers to money flowing in and out of your business, which is very different from revenue and expenses. Okay. So, for example, you might make a sale today, but not receive the actual payment for another 30 days. Excuse me. That money is not flowing into your business until it lands in your hand or in your bank account. And so the same goes for expenses. You might purchase a product or service today and not have to pay for it immediately. The money only flows out of your business when the money actually leaves your bank account. Okay. So that is cash flow. Okay. So when you are doing your sales, okay, you have all your sales and you're writing down your sales, how many sales you made, or you got your spreadsheet or whatever, however you calculate your sales, however you, right? You're looking at your sales and then you're looking to see, okay, how much came in, right? And this even has to do with like if you sell your services or you sell products and in installments, okay, you're not going to get the full amount. You're only going to get that installment coming in. So if you sell say a service for say $500, but they break it up into three payments. So that's what 120, 125, 135, something like that a piece. And they break it up in payments. You can't count, you see the sale, but you can't count the full sale as cash flow for the month if you're only going to receive, say, $125. Okay. So your cash flow from that sale, only $125 would go to your cash flow for the month, right? And so then the next 2 months is when you would get the full payment of that $500 sale. Okay. So now profit, which is also known as your net income. This refers to the amount of money remaining from your sales revenue after you had subtracted all of your costs. Okay. So that is the money left over after your expenses. Okay. Now, profit is typically reported as when most people think about profit, they think about the gross profit, okay, which is the cost directly associated with providing the goods or the services, right? So if you're a product-based business, then you might subtract your inventory, your sales commissions, um, and delivery fees from your revenue to find your gross profit. Okay. But your net profit is what is after all other costs are deducted. Okay. So this would be things like after subtracting your rent, your payroll, your taxes, and stuff like that. That is your net profit. Okay. So it's very important um, to the two, to distinguish between, to understand between your gross profit and your net profit. Okay. And so then you also, here are some practical tips for preparing for cash flow forecasting. Okay. So for each week or month in your cash flow forecast, you want to list all the cash you've got coming in. Okay. So you have one column for each week or month and one row for each type of income. And so you start with your sales and then you add them to the appropriate week or month. So this goes back to what I was talking about when I was saying you made a sale for 500, but it's going to be broken up into three payments. And so you're looking at, okay, so for this month where I actually made the sale here in March, I'm only going to get 125. And then in April, I'll get 125. And then May, I'll get 125. And then the full, it'll be done, right? And I know that's not $500, but what? 125, 150, 150, 150. Anyway, either way, you know what I mean? Like, you're breaking it up in three, right? And so then in May is when you will have the full payment. And when that full sale, you will actually receive the revenue from that sale, the full revenue. Okay. So you want to make sure that you are keeping up if you do, especially if you do installments, because if you just calculate that you got a sale but not thinking like, oh, okay, but I'm not getting the full payment this month, it will throw your finances off, okay? And it could leave you in a deficit at the end of the month, right? Okay. Now, another mistake that entrepreneurs make is not preparing for unexpected expenses. Okay. And so it's important that you have a contingency plan. And this is important because it helps organizations to identify and to prepare for potential risks and unexpected events, enabling them to respond effectively and minimize potential damage or disruption. And so by having a contingency plan in place for various scenarios, organizations can minimize the impact of unforeseen events, whether it be natural disasters, cyber attacks, or economic downturn. Contingency plans help to ensure that businesses can continue to operate or resume operations quickly after a disruption, minimizing downtime and financial losses. Okay. And so some best practices for setting aside emergency funds, because you also want to have emergency funds. Now, when you first start out, you may not have emergency funds. You're obviously going to have to build up some capital. But you can you can automate your savings, you can set realistic goals, create a budget. You got to make sure that you keep the um, emergency funds for the business separate from the main business account. Okay. It's just like in your personal, you want to always, you have your personal funds and then you have your emergency savings that is separate from the account that you use on a day-to-day basis. Okay. All right. And so getting ready to just wind this up. Here's some tips that you can use um, for your success. Some tips to help you to be successful when it comes to managing your business finances. Okay. So the first thing is using financial management tools like QuickBooks, um, Mint, Excel. I'm an Excel girl. I love Excel. It's old fashioned, it's easy. I like Excel. Um, but you also want to invest in professional financial advice. So working with uh, financial a financial professional that can help you to get your finances and get everything set up. Um, so that your finances are okay, are not so well, yeah, okay, but that your finances are set up properly so that your business can continue to run and flow. You're not worried about, having financial problems. All you're focused on is the growth and scale of your business, okay? Um, and then if you are, I do have a money toolkit that I have. You can use it for either business or or your personal finances. What I see is once you get your business finances set up properly, um, it kind of can help you to get your personal finances properly. Now, the money toolkit, I use it for my personal finances and it helps greatly. I'm going to link the video to the money toolkit. Um, I did a video on it, and I'm going to link that video too in the description of this video. But basically, what the money toolkit is it helps you, it's a more freer flowing way for you to work with your finances that doesn't feel restrictive. I know for me with my personal finances, budgeting always felt really super restrictive. And so I came up with this concept for the money allotment because it was much easier to allot my personal finances, and you can use it for your business as well, um, because I use it for both, and it helps me and it works very well. But if you are struggling with your personal finances, then this money toolkit will definitely help you to get your personal finances in order. Okay. Because even if your business finances are in order, what I also see is people have their business finances in order because they may be working with somebody, but their person personal finances are jacked the hell up. Okay. And so this money toolkit will actually can help in both, especially if you are just starting out. It'll help you. So I also will have the link to that on my link tree. You can get the money toolkit there as well, but I'll link the video so you can see exactly how it works, where I go over and explain exactly how the money toolkit works. So if that is something that you are interested in, you can definitely purchase that. Okay. All right. And then yeah, so that is it. All right. So thank you for watching. If you have made it this far, my goal is always to provide practical, actionable financial advice to help you to take control of your future. Okay. And so if you like the video, please do give it a thumbs up if it helped you and share it out with your business bestie. If there is somebody who, especially if they are new to entrepreneurship, please do share this out to help them so that they have the information that they need to start off on the right foot. Or if you know somebody that is struggling with their business finances, maybe they missed one of these steps when they were setting up their business. And so they can watch this and they can go back and they can get their business set up properly to reduce that overwhelm because entrepreneurship is not easy. And so that is on period. So, with the added stress of the finances also not being in order, that's just added stress on top of it already not being easy. So share this out so that it can help them as well. Okay. Now, if you have any questions, any comments, if you would like to book a reading with me, if you're like, hey, my business finances are great, but I do need some insurance, then you can definitely book a consultation with me. The link will be in the description of the video. All right. And remember, the way to secure your financial future is to protect it now because nobody is coming to save you. All right. Have a good one. See you on the next video.